Okay, now moving towards our third learning objective, that is understand cost behaviors patterns including variable cost, fixed cost, and mixed cost. Let's move further. So, cost classification, that is based on predicting the behavior. So we refer to as variable cost, fixed cost, and mixed costs. So quite frequently, it is necessary to predict how a certain cost will behave in response to a change in activity. For example, a manager may want to estimate the impact of 5% increase in sales that would have on the company's total electric bill. So this kind of behavior, we can categorize it as variable cost, mixed cost, fixed cost. So what is the variable cost? A variable cost that varies in total in direct proportion to the changes in the level of activity. For example, your total texting bill is based on how many texts you send. If you send more, if you send messages in more quantity, the total variable cost will be more as well. And now, variable cost per unit. So although variable cost changes in total as activity level rises and falls, so variable cost per unit is constant. For example, the cost per text sent is constant and 5 cents per text message. If you send 5 messages, for example, the cost of one text is one text is 5 cents, your total cost will be 25 cents. But one text costs you 5 cents. So it is very strange and very lovely as well, because total variable cost is increasing or decreasing with the level of activity, while the per unit variable cost, it behaves like a constant. Okay, now coming towards understanding fixed cost. Fixed cost is constant within the relevant range, or in other words, fixed cost is a cost that do not change for the change in activity, that is increase or decrease. So here your monthly contract fee for your cell phone is fixed for the number of monthly minutes. The monthly contract fee does not change based on the number of calls you make. So in other words, we have rent of the factory. So rent is fixed for the whole year. So for example, rent is $16,000. So whether you make 500 units or whether you make 5 million units in your factory, the rent would be 16,000. So what we first define our fixed cost is that fixed cost is constant within the relevant range. So we are talking about year 1. What if the rent is changed every year? So if we see cumulative on 3 years, the rent is changing. But for 1 year, when the rent is fixed for 1 year, it means whether you produce 500 units or 5 million units, the rent would be 16,000 for a whole year. So within relevant range, the cost is not varying or cost is constant. We call this is fixed cost. Okay, now behavior of the fixed cost per unit. So within the monthly contract allotments, the average cost per cell phone decreases more as more calls are being made. So in simple words, the cost per unit decreases sharply with the increase in number of quantity. So for example, the fixed cost is, for example, let's continue our previous slide example where $16,000 was our rent. So if we are making 200 units, what will be our fixed cost? So 16,000 divided by 200, answer is 80. What if we are making 2,000 units? Then 16,000 divided by 2,000, answer would be 8. So fixed cost is, the behavior of fixed cost is that it decreases. That is also very lovely and strange as well, because fixed costs in total behave like a straight line, straight horizontal line, while per unit fixed cost is decreasing. Okay, now types of fixed cost. One type of fixed cost is called committed fixed cost, and the other type is called discretionary fixed cost. So the committed fixed cost, these are long-term fixed costs that cannot be significantly reduced in the short term. For example, depreciation on building and equipment and real estate taxes. The other category is the discretionary cost, which means the fixed cost that may be altered in short term by current managerial decisions. For example, research and development and advertising. So if we pay for the billboard or pay for the advertisement to run on the whole month on television or some YouTube channel, you have to pay a fixed amount, and that can be changed in the short term. Similarly, research and development. Okay, the project is for 5 years, and you decided that after 2 years we are just cut the fundings. We are not allocating our funds for research and development. That is called fixed cost by discretion. So regarding the linear assumption and the relevant range, economists correctly point out many costs which accountants classify as variable costs, which actually behave in a curvilinear function. So nonetheless, within the narrow band of the activity here, there is a range that we can easily classify as a straight line range. So this relevant range is the range of activity within which the assumptions made about cost behaviors are valid. So in which we talk about in our previous example that rents are increasing every year by $1,000, right? But what if we are given 100 meter square and next year we want to acquire more 170 meter, then the cost will be like this. So this curve changes. So let's go further. So to understand the fixed cost and the relevant range in curvilinear function, so let's assume that we have an office space that is available at $30,000 per year in increments of 1,000 square feet. So fixed cost would increase in a step fashion at a rate of 30,000 for each additional 1,000 square feet. If company requires 1,050, it means they have to acquire 2,000 square feet because office space is available at additional of 1,000 square feet. So here, the relevant range of activity for a fixed cost is the range of activity over which the graph of the cost is flat. So that we talk about that if a company need more space, then you have to pay more, and the addition is for every 1,000 square feet they have to pay 30,000.